Hi guys, welcome to the A Plus Trading channel. Now in today's video we'll be discussing what are candlesticks and understanding market structure. Without further ado, let's get started. Alright guys, so in today's video we'll be covering understanding candlesticks and market structure. Now as we previously stated in our Forex guide is we have identified the definition of what is Forex. So that is anticipating the strength of one currency against the next. Now we do this by analyzing what we call candlesticks and market structure. So what candlesticks and market structure tells us is what's happening to price at this specific moment in time, what's happening to this specific currency pair at this specific moment in time, what's happening on the market, right? So this is essentially what the candlestick and market structure is telling to us. Is the market trending in one direction, right? Is the market going down? Is the market going up? Is the market going sideways? What essentially is happening in the market? Is this currency pair getting stronger each time against that one? Is this currency pair getting weaker? So that is essentially what candlesticks and market structure tells us. And based on what we're seeing, then we can make a decision by anticipating the strength of that currency pair. Ask yourself, what are candlesticks? Now, candlesticks is a type of price chart used in technical analysis that displays the high, low, open, and closing prices of a security for a specific period. Alright, so essentially candlestick is what we use to make our decision, as it tells us what price is doing. It tells us where does price open, where does price close, where is the highest point at which price went, where is the lowest point at which price went within a specific period of time. Alright, and this essentially ties into the type of trader that we are, because if we're a trader looking to trade the security for a minute, hour, or so forth, then we want to analyze price within a shorter space of time versus a positional trader who is going to be in the market for weeks, months, or even an year. He wants to look at where price is headed or what price is doing on a daily basis, on a weekly basis, on a monthly basis to make his decision. So essentially we use candlesticks to make our decision based on what price is doing and where we think the security is headed within a given time frame. There's two types of candlesticks. We have what we call a bullish candlestick and we have what we call a bearish candlestick. Now what does each candlestick tells us? Now a bullish candlestick essentially tells us that hey, the market is trending up, things are looking good, and a bearish candlestick tells us the market is trending down, and based on these we can make a decision whether to either buy and sell based on the direction of the market. Now what does each candlestick tells us? Now candlestick, as previously stated, tells us the opening of security or currency pair, the closing price, how high did the security traded or the currency pair traded, how low did it went. So a bullish candlestick has its low at the bottom here. Alright, so essentially this is called a wick, this is called the body of the candle, and this is called a wick too. So we have the lower wick here and we have the top wick here. This is the lowest point at which price traded for the security at that specific period in time. Right here represents the opening price, so this is the opening price of the currency pair for that specific period in time. So essentially what the body of the candle tells us is the amount of volumes, right? Now right here represents where price closed for that specific period in time, and this top wick here represents the highest point at which price went for that specific period in time. On the right hand side we have our bearish candlestick. Now this bottom wick right here represents the lowest point at which price traded for that specific period in time. This right here represents the time frame at which price closed for that specific period in time. This represents our body, so that essentially the volume traded here represents the opening price of that currency pair for that specific moment in time. Here represents the high at which the security traded for that specific period in time. Now we can differentiate between a bullish or bearish candlestick. Firstly, by its color, usually a bullish candlestick is green, and the bearish candlestick is red. Alright, and essentially another difference that we can note is that the bullish candlestick opens at the bottom and closes at the top, whereas a bearish candlestick opens at the top and closes at the bottom. Now, a group of these candlesticks coming together form what we call market structure. Now, market structure is the behavior, condition, and current flow of the market. So market structure tells us what is the market doing. Is the market flowing up? Is the market flowing down? What essentially is happening. Market structure can tell you if the market is trending or not. Alright, so this is what we want to see. Is price trending in a solid direction? Is price going sideways? And based on this, you can make a decision. Alright, if it's going up, I want to buy. If it's going down, I want to sell. If it's trading sideways, am I looking to trade that? If there is no clear direction, am I looking to sit it out? What exactly am I going to do? Now, there's three types of market structure. We have our downtrend market, we have our uptrend market, and our consolidation or sideways market. Now, the first one that we're going to look on is the downtrending market. And during a downtrend market, what you have is price creating what we call lower lows and lower highs. So in a downtrending market, price continuously form lower lows, lower highs, with each one getting lower than the other. Alright, so here on our left, we have what we call a line chart. So here's a lower low, we push to form a lower high, pull back, form lower low, push, form lower high, and this continues. Alright, so this is what we call a downtrending market, where it is continuously forming lower lows, lower highs, with each one getting lower than the rest. Alright, here we have our group of candlesticks coming together to form what we call our market structure, and here it forms a downtrending market structure. We form our lower high at this area, pull back, we form our lower low, push, we form our lower high, pull back, we form our lower low, push, we form our lower high, and this continues going down. This is what we call a downtrending market. Now, based on this information that the candlestick is giving you on the market structure, then you can make a decision against this. Alright, am I going to sell the euro dollars against the US dollars? Am I going to buy the US dollars against the Japanese? What essentially do I want to do if the market is continuously going down? Would I be looking for buys? Would I be looking for sells? So these are the questions that you might ask yourself based on the market structure that is given to you. You can make a decision based on what price is doing. Now, the next market that we want to look on is an uptrending market. Now, an uptrending market is a market that continuously form what we call higher highs and higher lows. So higher highs, higher lows. So it's essentially a stairs going up, while a downtrending market is a stairs going down. So each one is getting higher than each. So we push, we form what we call a higher high, pull back, we form a higher low, and push, we form a higher high, pull back, we form a higher low, with each getting higher than the other. This is what we call the uptrending market. And right here we have our uptrending market, or a group of candlesticks coming together to give us an uptrend market structure. So we push, we form a higher high, pull back, we form a higher low, push, we form a higher high, pull back, we form a higher low, push, higher high, and we continue. So it's the same for the downtrending market. We ask ourselves the same questions. What do I want to do when the market is trending up? Am I looking to buy when it's going up, or am I looking to sell? Do you want to sell when a market is going up, or do you want to buy when a market is going up? So based on what the market is giving us, based on the structure, then we can make a decision. Alright, what am I going to do? Is the US dollar getting stronger against the Japanese dollar? Is the euro appreciating in value against the US dollar? These are the questions that come to mind when we see market structure. And I'm going to show you an example on the charts of each of these market structures, so definitely stay tuned for that. The third market structure I want to look on is what we call a consolidation, or consolidated market. Alright, so consolidation is a period in the market where the market moves sideways. right? We're not forming any higher highs or higher lows going up, and we're not forming any lower lows and lower highs going down. Essentially, what price is doing is trapped in a range, not going higher and not going lower. So essentially, what some people do is shy away from consolidation market, as price doesn't have a clear direction. And that's true, because if price doesn't have a clear direction, then you don't have a bias. Is this currency pair bullish, or what we call stronger than the other, or is it bearish, we call weak, weaker than the other? So these are the questions you might want to ask yourself. Alright, so what we're going to do now is we're going to jump over trading view. So you go to Google and you type in trading view, trade view, track all markets. We're going to click on track all markets. Here in our top right corner we have our currency pairs. I'm just gonna see full chart, and we're here. Alright, so I'm definitely going to do a video covering trading view, because this is definitely one of the tools that you guys are gonna need when you're trading. Alright, because this shows you the candlestick charts, it shows you the market structure. This will help you to make a decision of where you think price is headed and what action should you take. Should you buy or should you sell? So for this example, we are looking on the US dollar versus the Japanese yen, which is our USD JPY currency pair. On our left, we have our base currency against our code currency. Alright, and here the D right here represents our daily chart. So we're looking on a daily chart. Here we have a weekly chart, we have a 4-hour chart, we have a 1-hour chart, we have a 15-minute, and essentially we have charts up to even seconds. This is a 12-month, which is a yearly chart. So this ties into the type of trader you are. So you look on the chart that the type of trader you are. Okay, so if you're a day trader, you know you want to look on the daily time frame and so forth. If you're a positional trader, then you want to look on higher time frames, weekly, monthly, etc. If you're a scalper, then you know your 1 minute time frame, your 5 minute time frame, etc. Alright, but for this example, we're just going to look on the daily chart. Now we're going to identify our candlesticks. Alright, so we're just going to zoom in at a random moment of the chart. It doesn't matter where. Alright, we're going to zoom in at a random moment on the chart. Now what we can identify, or what we can see, is various candlesticks right here coming together to form market structure. So we are going to show you what a candlestick is right here. So here we can see a bearish candlestick on our chart. We have our low right here. So this is the lowest price at which this currency pair traded for our specific period, which is our daily chart. So each candlestick right here represents a daily time frame, and this candlestick here represents a bearish candle within a day. So this is the lowest point at which price traded, which is 145.89889, sorry, and that is depicted on our left side here, the price. Here is essentially our closing price, which is 146.399. So that is the price that it closed at for that specific day. Here's the body of our bearish candle. So this tells us the volume, or the amount of price move that it made. Here is our opening price. So we're seeing our price open for that day at 146.847, and our wick right here, this top, this high, represents our highest point at which price traded for that specific day, which is 147.103. Alright, so that is our bearish candlestick. Now we're going to jump over to our bullish candlestick right here on the chart. Now this here represents our bottom wick, and this is the lowest price at which price went for that day, which is 146.239. Here represents the opening price, so this is the price at which the security or the currency pair opened for that day. So that is 146.399. This here is the body of our candle. Tells us what happens throughout the day, the price change that it made from here to the close. So this is our body of our candle. Here presents the closing price, and we see our price close at 148.295 for that specific day. Here represents our top wick, which is our high, and that's the highest point at which price went for that currency pair, which is 148.586. Alright, so now that we have identified each candlestick, and essentially this is the same for each of these candlesticks right here. Now remember what we said, a market structure is a group of candlesticks coming together. So when essentially we have all these candlesticks coming together, that's where we get structure, and we can get what we call a uptrend, a downtrend, or even a sideways market from this structure. Alright, so what we're going to identify right here is an uptrend. Alright, so in an uptrending market, as we said, price is either creating higher highs and higher lows. Alright, so we're going to track this here, with this here being our low. Then we have our higher high formation, our higher low, or higher high, or 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 higher low, and essentially this continues going up. Okay, let's isolate that from the charts. Now it's not going to look perfect, all right, but what you should be able to identify is price creating the higher highs and higher lows. So here's our higher high, here's our higher low, here's our higher high, here's our higher low, and it continuously goes up. So essentially what you want to see is price getting higher and higher each time, and based on this you can make a decision. All right, what decision would we make right here based on the structure? Well, we could look to buy the US dollar against the Japanese yen. Alright, because essentially what we're saying here is that the US dollar is stronger than the Japanese yen at this moment in time. Alright, for the past few days, remember each candlestick represents a day. We're saying for the past few days the market has been trending up. Alright, we're going to identify a downtrending market. Alright, we're going to take our tool here, and we're seeing a downtrending market right here. We have price creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, lower highs, lower lows. Alright, so essentially what we're seeing happen here is the market is creating a stairs downward. And remember guys, it's not going to look perfect as you see in an example. It's not going to look perfect of videos that you watch. And that's the key thing you want to identify, just be able to identify the structure in front of you. Now what we're seeing is the market creating lower lows, lower highs, lower lows, lower highs. So essentially what this is telling us right here is that the Japanese dollar is stronger than the US dollar at this specific moment in time. As such, if I'm placing a trade, I would want to sell the US dollars against the Japanese dollars, because the Japanese dollar is a stronger pair at this moment in time. So based on these structures, you can make a decision on what action you should take as a trader. Alright, and USD CAD, we have a consolidating market somewhere we have pointed out for you guys. So our next market structure is a consolidation market right here. And essentially what a consolidation market is, a market that is trading within a range. It's not making any higher highs and it's not making any higher lows. It's just going sideways, and this is what we have seen here. So essentially what price is doing is just bouncing within a range. It's not going higher, it's not going lower, it's just going up, it's just going down. Alright, we have a breakout here. Here is a consolidating market right here that we can identify, because you have price trading within a range. Price is not going higher and price is not going lower. Alright, so essentially price is just bouncing within a range right here. So these are the three market structures that you want to look on when trading. Alright, so this brings us to the end of our video covering the market structure and also covering candlesticks. Hope you guys have learned a lot from this. Now in future videos we'll be going in depth into understanding market structure, behavior patterns, candlestick patterns, formation, and so forth, so you guys can get an edge on how to effectively trade these uptrending markets and effectively trade these downtrending markets to make the best decisions possible and to make money while doing so.